Hello, everyone. Let's wait for the YouTube page to kick in, and then I know it's going. There's a black screen, and there goes. Hey, how's it going? What do we got? About 20 people here, so hopefully we'll have a nice little fun chat this morning. Hello, everyone. Welcome back to the Rational Investors Weekend Show, the Broiler Chicken Show. Bark, 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 bark. It is, where are we here? So it's getting on near the end of May, eh? So May 22nd, we got about another week and change here till the end of this month. And of course, it has been kind of a screwy couple months here, May, June. I think the irony of it all is I think we've been talking about a trough happening here in risk assets through this May, June window. And now that we're into it, I find it incredible how everybody all of a sudden now is like, oh, it's the end of the world. And ironically enough, it's actually incredibly cliche. It's literally exactly what we said was going to happen. Or maybe I said. I don't know if any of you guys actually agree with me or not. Let's see. Do I have that S&P chart around here? So people on the site now recently are going, okay, every time Brian loses a tab, everybody has to take a drink. So, that was hilarious. Already we started it right off the bat. Bang! And it's so early on a Sunday morning, Brian, you can make me drink at this time of day? What are you, a criminal? But we've talked about this lots. I mean, we've actually talked about this quite a bit. I'm quite shocked at how cliche all of this really is. I'm just trying to find the chart where I did all the write up on it. I think I saved it on. It's like on it. Yeah. Well, I guess we can use this. It's easy enough. Probably did it off of the Dow. Was it the Dow that I did? Actually, wow! Look at the Dow. Such a pretty image. So anything, why don't we? Well, we'll do it off the Dow this week. So first and foremost, what are we supposed to think if we ever see a market, running up egregiously like this? I think the very first thing that you should always think of is, well, it's a 38.2, because 38.2 is sort of like, okay, maybe I'm a bull market. I'm just absolutely rip-roaring hot, and I'm just stoked, but you don't really want to chase. This is sort of your... get a little heady. Okay, calm down, just relax. Like the tennis players, they go sit on the side, they use a towel, they towel off, and they have a sip of water, and they get ready for another run. So consider your 38.2, or yeah, anyway, any kind of sports analogy you can think about. Boxing match, go sit in the corner, take a break between rounds. Really anything. Anyway, so this is what should happen on any given time. Any time in the market, this is very natural. And in fact, it's interesting looking at the industrial sector. I think actually this is hitting the tech sector harder. And yeah, you can see on a relative basis here, we are all the way down 50%. And I think this is just purely a function of what kind of stocks do better or worse, giving a rising energy market. And I often tell my students that you actually see that business managers have a choice. When energy prices are low, usually it frees up their budgets, and they can go and invest in things like, Microsoft software, or, Salesforce.com. There's probably a really good example. And just investing in technology to help improve productivity, which in turn leads to more sales, which leads to more profits, which leads to more Lambos, more hookers and blow. Everybody's happy. Except for the commodity producers. So on the flip side, when energy prices are rising, business managers, they have to scramble, right? You got to make sure that the trucks can stay on the road. Got to make sure that the offices can stay lit and workers can work. Can't work in the cold. Can't work in the dark. So some of those kind of costs, they're non-negotiable. And of course, everybody's seen what energy prices have done of late. So as a result, I think this is actually a very natural reaction by technology stocks. They're getting really punched in the nose. And I think you could make the argument that they, like if we did something as simple as we'll just keep it really, really simple. Just QQQ is sort of our NASDAQ proxy in the stock market. Just make it nice and easy. Versus, I don't know, like a brick and mortar kind of company. What's a good brick and mortar company? I don't know. Somebody give me. Actually, AA is probably an interesting one. That Alcoa. It's a pretty industrial type name. So yeah, actually, this makes sense. So you can see technology dramatically outperforming, and then we came into 2022, and of course, who did what he did over there in Eastern Europe. And technology is just getting punched out here. Also, too, if you look at like individual names, this is a big index versus a stock. If you look like an individual name, like an Amazon or an Apple or something like that, I mean, the outperformance is even more dramatic. When, ironically enough, actually, when it comes to the brick and mortar kind of companies, this is Alcoa, as a sort of an aluminum company. It looks like a V-top. We'll probably go back up and test the highs. So, unfortunately, this doesn't really bode well for you crypto fans. It definitely looks to me like tech is going to have to cool its jets for a little while here. And interestingly enough, I was a broker through this event. I hope you all can learn from this because you're going through it in real time now. This was the last Jupiter-Saturn cross, and this is what happened to the tech sector following that event. Kaboom. Where are we in this curve? I get the impression we're sort of like somewhere like right in here right now, maybe. We're pretty far away from the top, but we still got a hell of a long way to go till we get to the bottom, folks. So fast forward to today, you can see very similar image. Probably the easiest way to think about this is something like, why don't we look for a trend line tag? Seems pretty realistic. How about, the interesting thing is that we are heading into the growth part of our economic cycle here, sort of big demographic generational cycles. So in a weird sort of way, this is going to be the ultimate personification of your reloading event. Like if I showed you, I don't know whether I can show you this or not. If we go back and look in the you can't, well, I suppose the same thing sort of here, right? Boom, 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 boom. You might have gone, Brian, I don't want to get sucked into this. I'm just going to try and buy the trend. I don't know, something along those lines. Right? Anyway, I can go to anywhere down here. Well, hell, there's the 87 crash, actually. So why don't we use that as a base? That's sort of like a high to low trend line. Probably better. And I'm kind of blabbing now. Bad habit of doing this. Could be here for 3 or 4 hours. Maybe something along there. Yeah, that's pretty good. So you can see nice little trend line, boobity boo, longer term. And all you're doing is you're just buying stabs against the trend line, right? And you could even argue looking at this and then going like this. Yeah. What do we call this area on the price chart? Right there. What do you think? Is that not the definition of everything that we teach at TRI? Wouldn't you like to have taken this whole education program, had all your trading plan all set up, everything rocking and rolling, ready to go, and you get handed that on a silver platter? I mean, what do you think? That's literally, ironically enough, that's what you're supposed to learn when you're at TRI. And you're thinking about, should I take this idiot's course? I don't know. What the hell's it going to teach me? It's going to teach you how to identify this. And more importantly, and this, of course, is, the hardest part of this whole damn game is actually stepping up and buying there and forcing yourself to buy. Because that's my plan. I buy W's and reload zones and trend line support. That's basically what this game is. I mean, ironically enough, okay, I think I've done the video today, folks. Just look for that. We're finished. Isn't that cool? It only took me, 10 minutes? Hey, that Beamish guide usually goes on for hours on end before I get something of value. So, ironically enough, folks, this is exactly what I think is going on right now. We just did our current analysis, and she pulled back to 38.2. Then we pointed out that she's probably dumping right now into 50% rules. Right, when we go up and look at the chart in a moment, you'll see what I'm talking about. And really, all we got to do is just wait for reload zones, trend line tags, big old fat W's, big buy signals, and away we go. And I'm telling you, folks, I mean, this is the irony of it all, is that, when we were back at the beginning of this year, right up here, and actually the end of last year, but really, I mean, the terrible part about this is, again, this is what you're supposed to learn when you're here at TRI. Is there any letter of the alphabet up here that maybe we should have been paying attention to? And we should have said, oh, you know what? That's a little bit concerning. Hopefully you all go, oh, Brian, that is a big up, down, up, M. M's are not good. So, and, as somebody pointed out there a moment ago, if you had been watching any of our videos, and trust me, I do a hell of a lot of these damn videos. So maybe that's the problem, is I just do too many. But actually, it would be kind of cool if we, well, I'll just show you now, but maybe, I don't know whether we have it or not, but, excuse me. We have this, I mean, this is so cool, because if you just sign up for the 30-day trial, you get this all at you for the next 30 days. You can watch all the videos. You can check out the news. You can check out the breadth indicator. We'll talk about the breadth in a little while. Super cool information there. But also, too, like our blog. This blog right here, this is worth a subscription unto its own. And God damn, Josh, he just keeps bringing it. I mean, holy, this is incredible value. This should be a subscription service. Anyway, way back when, I don't even know what the date of this is. There probably should be a date on when we publish this. Yeah, there you are. So February 15th. Hell, this was even before who did what in Eastern Europe. That's what we were expecting. And you notice that in essence, just about mid-year, the whole damn thing pivots and turns right back up. This was at the beginning of the year. And ironically enough, trying to, and we were even joking before we got together here for this video today, when I would say things like, well, this is a 4-year cycle, and typically Bitcoin loves to come down into reload zones through its 4-year cycles. And then I would show somebody, well, the reload zone at the moment is 15,000 up to 25,000. Man, it was almost like, and I joked in the lounge, this was almost like, literally like I insulted Jesus. It's remarkable how people were just, and if anybody has that Greta gif how dare you, that gif. I felt when I talked about Bitcoin coming back down to stupid things like the cost of production or coming back down doing Wyckoff checks of previous breakouts. I mean, literally, people in social media were literally exactly like Greta. It's not so much that they believed or disbelieved what it was going to happen. It was like, how dare you actually say a bearish statement? How dare you? And sure enough, here we are heading back down. It drives you crazy. Silly game. Oh, well, what can you do? So anyway, the point of the matter here of this intro blab, I guess, was, okay, so there you go. There's 38.2, counter trend rally way. Now we're at 50% roll. And remember I said earlier, the key to this is probably just watch this damn reload zone, exactly like I showed you before. This is a weekly price chart. The irony of it all, of course, is the market never moves in a straight line. I wouldn't be surprised if we go A, B, C, D, flirt around here. You see there's a foggy here and here. Maybe we kiss mountain and then dratch it away and then got to come back down. But in essence, a bottom down in this window through this time frame is pretty much exactly what we've been saying through the whole damn winter and spring. Is that we kind of thought that, Jesus, this May, June was just going to be a train wreck. What I have to say, I'm pretty darn impressed now. We'd always sort of conjectured, was Bitcoin going to become part of the mainstream? Was Bitcoin going to be accepted, adopted, all that kind of fun stuff? And I get the distinct impression that basically Bitcoin has been added to the fold. And so as a result now, probably a lot of Bitcoin maximalists and stuff and all that kind of nonsense are probably going to be like disappointed that basically it's just going to move in lockstep. It will have periods of outperformance. It'll have periods of underperformance. But to all intents and purposes, it's going to move with all of the risk indexes. Wow, what a surprise. In fact, actually might even just be interesting to go BTC USD, see what the kind of correlation is right now. If we do good old stamp, obviously Bitcoin's got a little more mojo in the tank than the old the indexes, eh? So I suppose that's good. As long as the beta, I suppose, stays relatively stiff, and that'll keep crypto kids happy. Let's see, pin scale. Let's do a new one on the left. Hey, there we go. Yeah, I mean, look at that. It's stunningly correlated, which I think is a good thing. I actually don't think it's a bad thing. And I think, the problem with Bitcoin here is, frankly speaking, I don't think a lot of people actually fully appreciate how much it actually went up. I mean, that's a hell of a move. I know Kavarkinator, we were so proud of him. He basically stepped in and bought it like, I think about $3,500 or something like that. And it went all the way up to like 60 G's. I mean, come on. It's like, oh, that's not enough. We want more. We want more. Give me more, you crack addict. So you can see these charts. I think they look awfully similar, and you're probably going to see a lot very similar price action. So, just like we're a prognostication, and, I just showed you there a moment ago off of the 2008 correction, we just apply the same logic. I'll just do a line chart here, keep it simple. There's that long-term trend line. That's a trend line going over a couple of years. It's probably usable. And then just draw good old things like reload zones. And even do fun things like Wyckoff checks. Yeah, you start to get a picture. And, here's the kick in the pants. Is, what are people going to be? Well, Brian's voice went really high. You know when Brian's voice goes really high, he gets really excited about stuff. But what are people going to be saying about this? They're going to be saying, oh my God, it's the end of the world. We need more bailouts. The irony of it all is that I think probably what happened, I mean, if we just keep this really, really simple, I think what happened was that we had a health scare that nobody alive really knew or lived through one of these before. And we didn't really have a hell of a lot of documentation about how to appropriately act through the Spanish flu. Because frankly speaking, their world was just on the cusp of changing from horse and buggies. I mean, oh my goodness. So they were sort of just getting used to this whole new sort of like automobiles, and a lot of cities and stuff that were technically basically living still in the 19th century. So our modern day society, I think this is trial by fire. And if anything, and of course, it's going to be terribly politically incorrect, typical Brian. I think on balance, we got to give Jerry Powell at least a passing grade. I mean, who knows what the hell this could have deteriorated into. I mean, look at what the hell's going on in China right now. Their vaccine, I've heard now at least 3 or 4 different people say the reason why you're seeing the chaos there is because their vaccine just doesn't work. And they won't admit that to the world. So, and in essence, this whole quote unquote globalization, it has basically come to a grinding halt. And actually, I listened to another gentleman yesterday. It was an interesting conversation. He sort of took on a bunch of Bitcoiners, and I think, unfortunately, put them a bit in their place. I get the impression that a lot of this rally, whether it be in NASDAQ or, GME, I mean, that was ridiculous what happened there. The American theaters. What was the movie theater stock that went crazy? This was, in my opinion, keep in mind the crisis was here. This was the people that were in charge of our society. They just didn't know what to do, and they freaked out. Like I said, I've said many videos of late that I actually think that this event caught the 1% off guard, right? Because if you actually look at Bitcoin's price, interesting sort of comparison, you can see that they put the bottom in, they rallied it back up to 61.8, they had brought it back down, they'd put in another bottom, and it was getting ready to rock and roll. And then all of a sudden, this chaotic event came out of nowhere. So I know we all like to beat up on Jerry Powell and beat up on the 1% and beat up on the banksters. They're all crooks, cocksucking sons of bitches. But I think they're just humans at the end of the day. And I think they all freaked out. And the good part about this, as a professional trader, there are lots of little tells that you should be able to take advantage of as you go through life and as you go through time. For instance, through this chaos, right at the bottom here, there was somebody who actually said publicly that they were willing to give up their life to save the economy. Those are the kind of tells where like, whoa, okay, this is just money. When the lives actually start getting lost, that's when things get crazy. And it's sort of like, you know what, enough with the selling, slow it down. And sure enough, in that chaos, and also too, and all of you have to learn this. It was such a valuable lesson, and you're probably not going to see it for another 10, 20, maybe even 30 years, but just file it somewhere back in the back of your brain. Whenever you hear the government, they did it in 2008 with the whole bailout, right? Where's the 2008 stuff, right? That's over here. Right? We're going to throw bags of money at the market. But remember, the bags of money didn't start getting thrown at the market until right here. Right? Now, why is it that the bags of money didn't get thrown at the market until here? And actually, that's a terrible line. I don't know whether any of you even know this. I mean, I was running a book of business through this. I remember this distinctly. What happened here? Believe it or not, through this whole event, the people that were in charge of the U.S. government, they did not want any bailouts whatsoever. What happened here? Yeah, actually, I that's an interesting conjecture. Now, of course, we're all crazy Foggenbaum fans. So, oh well, actually, that's why the market bottomed there, eh? Isn't that incredible? Ah, that's crazy, bastards! It's all fixed. It's all rigged. That's incredible, eh? But this was George Bush Jr.'s Twilight. And what was fascinating through this window, because keep in mind, I was a broker through this. In fact, I was even making reference to my 1980s website because I used to do a weekly commodities trend survey right through all this, right? But this, all through this, this was the environment, especially as once we get into sort of election year. Who is going to replace George Bush? Because there was no way in hell Dick Cheney was going to take over. It just wasn't going to happen. And the normal route of succession should have been Dick Cheney as George Bush Jr.'s vice president, should have stepped into the breach. But of course, what they got away with in their 8 years in Washington, it doesn't surprise me that after the end of that 8 years, they were like, you know what, we're all done. We're so stinking rich. We got mountains of money on the third moon of Jupiter, just waiting for us over there. So we don't need to play in this playground anymore. And they just walked away from the economy. And of course, Lehman Brothers, AIG, Bear Stearns. In Canada, we had a funny little company called ABC Paper through here. It was just went on and on and on about what a train wreck it was. And then finally, the whole damn thing collapsed, right? So the point being that once you actually get down into here, what happened? Well, yeah, it wasn't. It wasn't. I mean, I don't know whether you remember that, Andre. Like, they didn't really start to get to work in serious, and I didn't think they actually waited for the new Congress to come in. But more importantly, George Bush and his Secretary of Treasury at that point was an old Goldman Sachs guy, the really tall guy. What the hell was his name again? Somebody remember off the top of their head. Anyway, and he was adamant: no bailout, no bailout, no bailout, no bailout. Then all of a sudden, Obama, of course, was elected, and they had one more push lower just to drive all those people. Paulson, that's right. Yeah, so you remember Paulson. I mean, he was the biggest dick. I mean, he was just like, no, 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 no bailouts, no, 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 no. Right. And so as a result, right. So anyway, point here was Obama comes in. And the very first thing he does, of course, is that famous speech. Timothy Geithner was the sort of came to Congress, and he was actually the first one. And in a weird sort of way, kind of like how you see Yellen acting right now. Geithner was sort of the same way, but the Fed was really driving the bus, and Bernanke comes out and does quantitative easing, which is in essence basically bailing the whole damn world out, right? That's what quantitative easing was. So as soon as you had news that the bailout was going to happen, have you ever seen that great short movie and all that? I mean, the funny thing is the moment that the bailouts were actually announced, well, most of the damage was done. Right. So, point of the matter here is bottom was put in as soon as you heard word that quantitative easing was starting. That's basically what happened through here. And I remember distinctly seeing Geithner testify in front of Congress and sort of getting them ready for this event. And then, of course, first buy signal you get, go with it. So fast forward to just recently, and in essence, that's exactly the same thing that happened here. And you guys all need to learn from this. And of course, I affectionately say in these videos, shouldn't we debate mortgaging our kids' future? Shut the fuck up. Give the banksters all the money they want. And that was your cue that everything was going to go insane-o inflato. On top of that, the Fed took interest rates basically to zero, which is probably, ironically enough, more stimulative than any sort of short-term, sort of stimulus package that they talk about. But it usually takes a good 6-8 months for the market to sort of absorb and sort of reposition itself. Anybody who does our education program, and we talk about the yield curve and the way the financial services industry, basically when the Fed takes interest rates to zero, that's guaranteed profits for them. But that means they have to go and loan out money, borrow at the short end. They have to see the term to maturity. And at the very minimum, most of those loans are a year in duration, 6 months, 90-day paper, that kind of stuff. So it takes time for that to work its way through the system where the financial services industries are actually seeing the profits and they're actually realizing the profits. But what usually happens is the damn market just becomes a runaway train. And that's exactly what happened here. And then to add insult to injury, and I think, interestingly enough, I think Bitcoin did sort of see this, is that about halfway through last year, Biden, in his great wisdom, went and passed another massive spending program that the money didn't, like the economy really didn't need to have it. And that actually, I think they blame on this sort of inflation that we're having now. Because there was a whole bunch of new, all these socialists that were elected, under Biden, sort of the anti-Trump wave in the U.S. House of Representatives, the MMT people that have no education in economics whatsoever. They just, hey, interest rates have been falling for 20 years. They're going to keep falling forever. And anybody who, this is where JP Morgan comes in, because what is really going on here, the most important thing you have to learn about all of this is that all of this stuff moves in circles. It doesn't move in a straight line. JP Morgan had a funny statement, a million years ago. He said, millionaires disregard astrology, but billionaires don't, or something along those lines. So what does that really mean? What is astrology? And I think to all intents and purposes, astrology is nothing more than just this big clock that's ticking in the sky. And it just keeps on ticking. It never stops. And the moon, the planets move through their various constellations and their relationships with the other planets on a very consistent basis. And just as sort of Spanish flu was the big pandemic problem at the beginning of last century. Well, what a surprise! Almost 100 years later, right on cue, boom, another big sickness wave. And now the poor old monkeys are being dragged into this shit. I'm sure there's a bunch of monkeys around going, hey, wait a minute, what the fuck? Don't bring us into this crap, man. We don't, and that's the one thing it amuses me, right? Is I've been on this planet 50 years. I've never heard of monkeypox. Where the hell did they come up with this? And the funny thing is there's like 20, or is there about 8 billion people on this silly planet, and they've got a confirmed 20 cases. And then all of a sudden, okay, this is it. This is the next one. 20 cases. But still, the monkeys are going, look at, don't tarnish our name. That's not fair. Anyway, blah, 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 blah. So now let's see if we can connect the dots here. Should Bitcoin do somewhat of a similar type pattern? I mean, this is the NASDAQ, and if and when we do get down against these trend lines, and previous breakout levels and reload zones, should we be thinking about panicking and dumping, or should we be thinking about accumulating? Keep in mind, this is a weekly price chart. And kind of like what we showed you before, what's our sort of cue? That, all right, it's time to get back in the pool. And, if anything, this is a beautiful example. That's a big ass W in a reload zone. And hey, we even got some fog and bomb levels to support us. So, so could we see a similar situation? I don't see why not. What I would just simply say is let's let the market get down into this level and then let's wait for the W's. What's interesting, of course, is we have this very, very well-defined M top here. So probably all of the TRIers probably have done their chaos theory levels. Interesting how we just banged into a chaos theory level there on the NASDAQ. So my hunch is we're probably near some sort of oscillation event window here. Interesting how 877s are actually on the other side of this reload zone. Yeah, this might get pretty nasty. And then, what I might suggest with the way that we did this one here, because it just worked out so well, is what happens if we take a chaos. And actually, that's interesting if we go close. Oh, look at that. Clothesline. It actually nailed the damn bottom perfectly. Oh, my God. That's ridiculous. All right. So what do you think? Should we go do it now and see? So that's this one over here. Let's see where 2.618 takes us there. Survey says, I guess that's the lowest low, eh? Oh, hello. So interesting. 2.618 off of this range takes us down into here. So I guess what I would be thinking is I like that 2.618, and really, this is what we would say now. We have location. And we can even crisp this up a little bit. And we can go boobity boo. And maybe even off of that level there. There's a nice window. Notice that this horizontal support and resistance line. Wow, look at that. It's incredible when you do this. Have you guys ever heard me say if you can find 3 reasons for a trade, you probably can find 4, 5, 6, 7, and 8. So check this out. We're just looking at the chart. We're drawing reload zones. We're drawing trend lines. We're drawing foggy boggies. We're drawing Wyckoff checks, Benkoff check, if you like to follow our show on Wednesday. And lo and behold, who can tell me? What's the statistical probability that a gap is going to be filled in? If you ever see a gap on a price chart, what's the statistical probability? What the hell am I looking at? Why is this not moving? Oh, that's weird. Done something funny here. What's the price? 11. So that must be this one. Oh, there it is. Okay. Sorry about that, folks. What do we have there? I mean, gee whiz, it's sort of jumping out at us there, right? Look at that. Hello. And actually, interesting enough, the gap actually starts there. But I think candle body aficionados would be happy if we just filled in there. So what's that? That's 7,700 on the NASDAQ. Whoa, ouch. So, and the interesting thing is what letter of the alphabet does that bottom look like? Does that look like a W? Yeah, actually be interesting. Let's see what percentage it is. And my hunch is that's probably about, what did WD Gann? Let's see if you guys can play some trivia with me here today. What does WD Gann say market should correct to in a recession? Yeah. Anyone? Applesauce and monkeypox for dinner. Yummy. That's right. So what do you think? If we're thinking recession, how do you figure this out, Jonathan? What is the 50%? 50% of what? Jason says 50%. The Matador says 50%. Believe it or not, it's 50% of the entire price. So it would be interesting. Like we have this level here. Why don't we put a little circle right here? Like so. Then let's go back to whatever the all-time high is. And take this and do a 50% roll, and we'll just take it right to 0. So that's the high. And what do I want to do here? I want to go coordinates. And we'll do this right off of 0 itself. So then that way that literally gives you a 50% level, eh? Oh. Hello. Isn't that incredible how you get all these damn confluences? It's just over and over and over. And what did I say? If you can find 3 reasons for a trade, how does that saying go? Let's see if anybody can answer that. If I can find 3 reasons to justify a level, how many more can I usually find? 4, 5, 6, 7. We could just keep doing this all day long. I get, what do you think the odds are if we look at the volume profile that this is probably also a volume profile level to be a buyer? All right, she's probably pretty good. We looked at like long-term moving averages. One study that's been really popular on the site lately is to look at the 200-week moving average. Pretty simple. Moving average. Could we just do moving average? Just moving average. How do you do a simple moving average? There's nothing simple about simple moving averages with trading view. Which one is it? I just want SMA, but I don't want somebody's script. It seems kind of dumb. Oh God, I have no idea what it is here. Yeah, that's silly. These are all people's scripts. How do I just? Oh God, how stupid! Now I'm a doofus. Okay, gotta be in here somewhere. Moving average, exponential. That's cool. Oh, come on. Simple. No. Oh, this is so dumb. What the fuck am I going to do here? Okay, I'll do that. And then these are all the scripts that TRI people have created. So let's see if we can just do this. We'll go turn everything off. There's the SMA. 200. Okay, that's weekly. Okay, where the hell is it? Great. Oh, you know why? Because no, I don't know why. I don't know what I've done here. Darn it. Sorry, guys. Oh, well, totally amateur. All right. Well, anyway, point of the matter here is probably can find 4, 5, 6, 7, and 8. So you got gaps. You got your long-term trend line. You got your reload zone. You got foggy boggies. That 877 right there. Man, I've been seeing a lot of 877s getting tagged lately. I think that's a very popular level when markets start going in sort of like panic mode. So, and also too, actually, we had an example like this in the futures trading club that we had. I don't know, was it crude? I can't remember. I don't think so. I think it was the stock market. Yeah, down here. This was really interesting because check out these foggy buggies. So you got 2.618. So bang, we slammed into there and it consolidated a bit, a bit of chaos. That's cool. Then it loses this level. But if you find that actually the market just blows right by a foggy boggy, that should have gotten some play. That actually is a really important tell. And notice it blew by it, and then it tried to counter trend rally, and it couldn't even get back to that level. So what is this saying? This is actually saying, I really want to be down here at 877. So notice, couldn't get back there, and just straight line slammed right down into these levels down here. And then notice, right, this is where chaos comes into the market. In a weird sort of way, this is heavily bearish. So chaos would be nothing more than a check of that bearishness. And sure enough, we got a big old rally. So I thought that was actually a really cool demonstration of, if anything, you want to take something to learn from this free video. If you see the market sort of disrespect a foggy, it probably means that it wants to get down into the next one in a hurry. I thought that was interesting. Probably also cool. We could probably even get an idea of where the hell they wanted to bring this thing back to. Foggy buggy. Hi-ya! All right. So actually, we're probably a little overdone here. We could also. I can't believe the guy's dead too. God, that's so disappointing. He seemed like such a young guy. There's another foggy buggy in there. Interesting how we got a little bit of chaos come in through there. I wouldn't be surprised if we actually open up a bit down here, but anyway, we'll see how it goes. Maybe if we're not going to respect that and we just churn up thrive, maybe what it's saying is we want to go right back up top. Could be. Anyway, fun sort of tool to add to your tool belt. So foggy buggies off of like weekly price charts. And if crypto is highly correlated with the corn, probably going to see a similar direction in the corn. Question here is, and actually I am quite amused by this, sort of perplexed, right, is do we get some back and forth here off 4669? I think we should. But only time will tell, I suppose. And actually that sort of brings us to, obviously this is a crypto show, so you guys want me to talk crypto. Couple points that I put out over the weekend. This was an interesting I always think that stocks lead commodities. So very hard lesson for a lot of the public to really learn. Ironically enough, actually, it's I think it's just based purely off of common sense. So should it surprise us to see something like this MicroStrategy and Mr. Saylor be basically leading and a leading indicator of a correction? And how should that correction in his stock go? And ironically enough, and the thing is, right, this is off a logarithmic chart. So it kind of puts growth into perspective, right? A 1 penny increment change in earnings from, say, earning a penny to earning 2 pennies, well, that's a 50% increase in your profit margin. However, a 1 penny increase in earnings from, say, $1 to $1.01, well, that's only a 1% increase in earnings. So you use a log scale chart to try and sort of put into perspective growth. So it just takes bigger and bigger moves, the higher and higher your price goes, to equate to the same sort of growth moves that you get when your asset price is low. If we look at it on a regular scale, then this chart looks crazy. It's just like, how the hell do you quantify that? And ironically enough, this looks a hell of a lot like a lot of the cryptocurrencies, like Dogecoin kind of nonsense. But if you really want to understand the growth perspective or lack thereof, I suggest you look at it from a log scale. And then these kind of studies actually, I think, are a lot easier to understand. So you can kind of see, you get like sort of midpoint consolidations climbing up here. I think that's basically what that is. Then your blow off top up into here. Then, of course, your M. And then your failure. Then your counter trend rally. Then now we're starting to make A, B, C, Ds on the way back down. So A, B, C, Ds. And as I kind of pointed out with the arrows, I think we're probably somewhere right in here. And I also noticed if you talk to Mr. Saylor, he isn't nearly as peppy, we'll say, as he was back here. When you heard videos of him here, and this is the one thing I absolutely hate about these guys is, oh my god, they're so arrogant. Like I said earlier, as gnarly old technician, all I do, and actually, there's a gentleman on the site is trying to replicate the way that I used to actually trade for clients in the commodities arena. And this is my 1980s website. I'm trying to get Sjord to bring it into the 21st century, and I got John here to try and help me. Although, anyway, the point of the matter here is this is the way a commodities trader would look at the market, because what we're doing here is we're just playing extremes. You probably hear pit trader fade rallies, right? All that is market rallies up into the top end of the range, and the trader comes in and sells against old highs. Same thing, moves to historic lows or against low ends of range. Well, usually commodity trader will come in and just buy against the bottom end of range. So that's basically what this approach is, and that's the way that I approach all markets, is that they move in sine waves. So I want to force myself to try and come in and buy at the bottom end range. I want to force myself to be thinking about either selling, taking profits, or just getting the hell out at the top ends of ranges. I developed years ago a really, really simple approach to investing that makes clients really happy. And in a weird sort of way, if you're a stock broker, you're not thinking about the next 3 months. You're not thinking about the next 6 months. You're thinking about, what does the next 4 years look like? It's no accident that on every single investment advisory kind of recommendation that comes out of brokerage houses, and I'm sure crypto at some point, all these crazy influencers that just make these outlandish statements on social media and stuff, at some point the SEC is going to go after one of these guys, and they're just going to railroad him or her as the case may be. But I think down the road, and especially now with this whole Luna debacle, hopefully, but down the road, you're going to have tons of disclaimers that go out on everything. Past performance is not indicative of future results. But the most important one, and ironically enough, Goldman actually, even when they recommended buying Bitcoin at $1,100 back in 2014, which I distinctly remember, I even had the research report, but I don't know what the hell I did with it. I think it's on an old computer somewhere. As long as they stamp 3 to 5 year time horizon on this advice, quote unquote, they can get away with a lot. That's a huge wiggle room. Why? Because the business cycle moves in about 4-year cycles. That's what these things do. So if you say 3 to 5 year business or time horizon, well, you've got it nailed, right? You've got 4 is right in the middle of your window. So if the market does rally in that time frame, your client goes, "Hey, look at that! You were right. 3 to 5 years. Oh, I made a pile of money. Well, what a surprise!" And it also gives a lot of wiggle room. Like that Goldman recommendation at $11. Within 3 to 5 years, the price was substantially higher than 1,100, but in between it had to go down to 150. So they had lots of wiggle room. Anyway, that's sort of how a broker approaches the market. And what I'm doing is I'm just trying to build a book of business. Maybe, in fact, I might even, I'm actually warming to the idea, because we are moving back into a growth cycle, which means this is actually the time to start your broker business and build that client base. Because if I could raise like $1 million, $2 million, maybe even let's say like 10 million, and then you just charge a 2% management fee. So that's what, a couple $100,000 a year. It's not a bad living. That book, Jesus, in this growth environment, I don't know whether you guys, and probably a lot of you just don't understand this, and that's fine. I mean, I don't expect you to, but if we look at this on a logarithmic scale, this growth is nice. I mean, hey, what the hell? But look at what this silly market did through the last growth cycle. I mean, the numbers that you see here are fun and all, but they're a shadow in comparison. Oh, stupid index doesn't even go back. Isn't that weird? I can't get the NASDAQ 100 before. Isn't that bizarre? Anyway, so this index only starts at a low here of 85, 101. You see into the .com peak, that almost hit 5,000. And you know what's interesting? Really good anecdote is on this event right here. I remember distinctly people used to say, oh, the NASDAQ's going to be higher than the Dow. NASDAQ's going to take over as the institutional index. Now, as soon as that conversation started, i.e., this time it's different, then you knew that we were getting really close to the end of the run. And lo and behold, I heard through this cycle people saying that China was going to take over as the world's leading economy. And, you know, you could argue that the Chinese stock index was going to replace the Dow as the major industrial or the major index of choice. And that's probably, I guess, a sign of the end. But anyway. Okay, so point of the matter here is that is some absolutely insane growth. I mean, just over the top growth. And this number was actually quite a bit lower in 1980. I mean, it's quite remarkable how the amount of growth here. This growth is fun and all, but I mean, you can see there is the base following sort of the US.com blow up. This has been, I mean, it's been okay. What is that? That's 10 times growth. Yeah, that's okay. But you can see here that 10 times growth is like here to here. This is 10 times growth here to here. And then another 10 times on top of that. So ironically enough, I don't even think you people can fathom how high these indexes are going to be by the end of this growth cycle. This is going to be startling. But that's sort of, everybody's got to take a drink. That's this conversation. And what's scary about this is going to look like this, right? There's our growth that's coming. But this is priced in like stable dollars. Now, maybe if we're lucky over the next few years, we can create some sort of stable currency that this is based in. But as it stands right now, this is the world that we're in right now with this very unstable currency. If we continue along this path, and they could do this, right? Just keep fucking money printing through the roof. Who knows where the hell this number is? You know, this might be like Bovespa kind of numbers, you know, where the stock index is in the hundreds of thousands, just because the inflation rate is just so absolutely insanely out of control. That's what's going on here. But, you know, sort of bringing this full circle, believe it or not, with them actually engineering a bit of a recession here, and are they actually getting religion? I think this is what needs to happen. If they engineer a recession, and it would be awfully nice, but I don't think they're going to do it. But if they engineer a recession and they can try and get these damn deficits under control, and they can actually even start thinking about reducing the money supply, then maybe, just maybe, we might actually be able to undo a lot of this damage that's been done to price over the past few years with this health crisis. I don't know. Only time will tell. Obviously, it's going to be it's a big if. You know, I suppose if this has to unwind, I don't think they're going to allow this to happen. This unwinding back down to sort of like this trend line means that they are actually going to reduce the money supply and bring us back down into those old pricing mechanisms. If a scenario like this happens, it means that the Fed has lost control. This isn't a recession, it's a depression. But I don't think we're there. I really don't. I think the Fed's got a pretty tight control of this. They're walking the market down into recession, sort of reset levels. But it's in the context of we've gone and reflated the economy. And now we continue this crazy fugazi game. If anything, there probably needs to be more money printing. Why do I say that? Because I don't know if somebody put it in the lounge, but I saw earlier today. It was a really cool pic. Somebody posted that the relative world debt levels, and even the U.S. Federal Reserve board members themselves said that if a country's debt to GDP gets above, I think it's 130%, then it's unsustainable and the whole darn thing's going to collapse. So what do you do in that situation? Well, you got to go and inflate the economy, print a whole bunch of money so that that debt to the actual size of the economy is back underneath that 120, 130%. Then I was kind of hoping I could scroll up and just show you. See what we got here. Let's see if this works. Hey, there we go. I think this was the page that was shared. This looks like alphabetical. It's kind of hoping, well, maybe we can. Hey, there we go. All right. So, United States of America, right here, they're showing 137%. Now, this is as of December. I think it's actually a bit lower than that now. So I think this is actually a bit old. But we're up in that area where they're still probably going to have to do some more money printing. So, whether they actually have to do the money printing now, or is it saved for maybe a few years down the road, I can't tell. What I would say is that they are in the process of correcting this market. This is healthy. This is natural. This is what should be. If anything, what they want to do is they want to quote unquote normalize interest rates, which do I have that on here? It's one of these charts. That's that conversation. If anything, they're not allowed to let this ratio get above 1.0. If they do let this get above 1.0 and stay there, then we actually have some serious problems in the financial system. And it means that the people that use the money market have lost faith in the government guaranteed. And you might just find that there's a complete run on the market. You can see they just put an M in here. So the market's sort of believing that the Fed is sort of getting serious about this. And you can see there's their interest rate path. As they've sort of said, okay, fine, we got to start raising interest rates, and the market's kind of calmed down here a bit. So if anything, that's good. But what we have to understand is that this is sort of in the context of sort of a broader normalization of rates. And these cycles usually, well, you can see here. I mean, the whole cycle from peak to peak is basically about 67 weeks or months, beg your pardon. So that's a long time, right? That's 5 years. So do we have to spend a couple of years sort of moving up here on the sine wave till we hit peak 34 bars? What is that? That's 34 months. It's a little less than 3 years. And are we about, it looks like we're about halfway through that. Yeah. And then the interesting thing about this is if you look at this image and understand that the cost of money drives all risk appetite, then ironically enough, if you can actually play, maybe we should even do this as a fun report, is Josh put out the Benner cycle. Where is the Benner cycle? Mr. Benner, of course, he did up this image like 200 years ago. And it's just almost perfectly spot on. But he's basically suggesting that we got to look for this trough somewhere in like 2023. And this might be notice that this peak was the very end of 2019. Market actually topped out in January 2020. So you might just find that, and of course that was before all the sickness and money printing and all that. you might just find that we don't ultimately end up troughing and actually finding our base until the very latter part of 2023, maybe even the beginning of 2024. And then 2024, 2025, China's been making reference. Hopefully, they're beyond the sickness by that point. Things are sort of stabilized. They have this Belt and Road Initiative. I still think, ironically enough, with them being as militant as they are about shutting down all their cities and stuff, which, as I said before, from what I understand, is just simply the fact that their vaccine sucks horsecocks. I think I've told you all, do not buy anything from China. I used to have retail customers of mine who would, I was a broker and these people ran businesses and they would tell me, here we are in Vancouver, British Columbia, Canada, right on the Pacific. So we did trade with Asia all the time. And these guys would tell me that if they ever bought anything from China, you have to throw half of it out because it's just unusable. You've heard stories where they actually feed baby formula to babies that's made out of carpet. And the funny thing is it happens, and us in the West, we don't get affected by it. So we just go, oh, shrug it off. No, China's still awesome. That's what social media says. So anyway, what a surprise. The Chinese vaccine is garbage. What a shock. Anyway, so their solution is, okay, so yeah, we can't make vaccines to save our souls. So the only solution we really have is we got to just shut everything down. And interestingly enough, in this crazy inflation world, the Chinese, what they've gone and done theoretically should be massively deflationary. They're basically just shutting down the world's economic output engines, Shenzhen and Hong Kong, and there's one other city that they were making reference to. That basically they just basically said, "No, you're not doing anything." So the irony of all of this, though, is that we are now living in a world where this has very little to do with demand. Ironically enough, I think you could make the argument, Jesus, man, I'm just talking 100 miles an hour here today. I think you could make the argument that basically over the past 40 years, we have lived in a very sort of demand-driven society. And there's just so much demand. There's so much demand that in the face of that overwhelming demand, companies were constantly looking for ways to increase profit margins. And ironically enough, one of the ways that it's very easy to increase profit margins is move all your production to a country that has a very low currency. And that way, of course, you produce all the crap in the local currency. It's a cheap currency, so paying the slaves is nice and cheap. Then you bring the product back to the Western market, sell it into the market at full price, and you got big fat profits. And that's things like Walmart and stuff like that. And oh, what a surprise. You look at Walmart stock. Does it not make sense that if Shenzhen and Hong Kong and those other places are basically being taken away from the capitalist as their sort of cheap source of labor, what the hell's the stock going to do? Does that not make sense? You should all look at that and go, well, I guess that makes perfect sense. Where's Walmart going to get all the crap that they sell in all these centers and nothing? The little happy face guy that you see at Walmart, my hunch is he's not going to have much of a happy face. So this is where the inflation that we're living through is coming from. Does that make sense? Hey, Andre's always here trying to learn something. Do you get this? This has nothing to do with demand. Nothing to do with demand at all. This is all about we conned ourselves into believing that we live in a global society. And all it took was a little cocoa and then some dickhead in fucking Eastern Europe to start murdering people in mass. And that quote unquote globalization is basically coming apart at the seams. So That's, I think, what your inflation is. It is a supply issue. It has nothing to do with demand. So, does it now, given that understanding, does it not make sense why it was actually really stupid to do things like approve huge social spending programs by the US government and Mr. Biden and all the goddamn socialists and fucking my idiot doofus leader in my country who's got a finance minister that has no education in economics, no formal education whatsoever. She's now the finance minister of a G7 country. How the fuck does that happen? It's chaos. And what's worse is in this chaos, am I holding Ubik? Yeah, I mean, remember, I always sell halves on doubles and that kind of stuff, right? So, yeah, if it's free shit, I just wait for Trex to delist it. Then every once in a while, somebody posts somebody just asked there, "Hey, Brian, are you still holding that Ubik?" Yeah, I still got it. I believe, if anything, I like those kind of stories because they never really did pump them this last cycle, which means that they're probably just going to sit there and do nothing for the next probably year or two. That wouldn't surprise me one bit. So the question you ultimately have to ask is the Ubik network itself still alive? Are they still doing things? Are they still existing? Was it subject to pump this past cycle? No, I don't think so. I think market completely overlooked them. Maybe that's a good thing. I mean, the point here, of course, is depending on your approach, how you bought that. Did you buy it as a trade? What was the risk management strategy you were employing? I mean, hell, I suppose Ubik's chart probably looks like Walmart right now. It wouldn't surprise me. Maybe we look at it versus USD. Yep, totally in the shitter. And actually, this makes sense, right? What would we call this price pattern here? If you look at it over a very long period of time, what would you call that? I would actually call it a narrow sideways channel. And I suppose probably even in here, we probably called this a narrow sideways channel down here. Now, could you gotten some doubles off of these W's into these highs here and established a risk-free trade? Probably. It's a pretty good move. What is that? That's 12, and they took it all the way up to 70, 80 cents. So you can't say that there wasn't a rally to establish those risk-free trades. There was. Was it this cycle's darling? No, definitely not. So are they still alive? I think so. It's interesting, if you are long from these areas, you're long from basically where the street is long. Is it so? If you quote unquote little old lady, and there's some fucking clown on the internet now who's gonna like NFT little old lady, fascinating. Oh goodness. Anyway, if you quote unquote little old lady this position, well, you just hold on to it, right? And hopefully you sold half on a double, and you got yourself free coins, and just like the way the NASDAQ looks, the way the broader market looks, this thing's probably not going to do a hell of a lot here over the short term. My hunch, though, is that kind of like, I think, in a weird sort of way, this market here, I think that this looks a lot like the 13-14 bull. And the altcoins and the real insanity of the altcoin market actually did really, really well in that sort of 1617 bull. That's where the altcoins went really nuts. And I got a sneaky suspicion that this coming cycle, this next wave, is going to be that all of the shit rallies, because the shit just didn't do anything this cycle. This cycle was all about it was all about DeFi. If you were part of the DeFi space, great, you did wonderfully. And of course, now all the DeFi kids are dying 1,000 deaths. So hope you took some profits on the way up there. If anything, and on Wednesday we go through all the crypto names. If Brian doesn't talk too much, I noticed that a lot of them now, even the DeFi names, are coming back down to earth. So to answer your question, yeah, I still got my Ubic bag. It's free. Don't really care. Got a whole bunch of that Geo too. I love the story behind that one. That one should at some point do things. And then also too, the question is, are you trapped in Trex? If you can't get listing anywhere other than Trex, that's dangerous. You're sort of skating on thin ice, I think. So, and frankly speaking, I don't even know if Trex is even going to last, to be honest with you. So there's that issue as well. So and keep in mind, every single one of these crypto stories has its own issues, its own fundamental story. I haven't talked to Alex in a while. He did come across as a fairly honorable guy, but I suppose, he could have been, I don't mean to be rude, but, there's a reason why I have this as my picture for this one image. I hate to say it, but I think it actually best describes my past 8-year experience in this crypto space. And the worst part about all of this is that this space is stunningly cannibalistic. So one member within this space will easily and without reservation throw other members of this space under the bus in a heartbeat. And allegiance is only paper thin. Your allegiance of your community is only based on whether your asset price is going up. And if it's going down, then you basically, you might even be murdered in this world. I always got the impression that Alex was an honorable guy. Never really got to know too many of the other guys involved in the story. But hey, it might have been a whole fucking scam. Keep in mind, this is venture capital, folks. Anybody who's playing in the crypto space, I don't quite understand this, but they've actually sort of convinced themselves. And now, the worst part about it now is you're getting all the Bitcoin maximalists all saying, oh, see how smart I am? I told you so. And you are idiots for considering that shitcoin might do better. And blah, 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 blah. And it just goes back and forth, back and forth. And frankly speaking, it's a little disappointing, to be honest with you. So, what's funny is actually, Alex, this is from an interview that Alex, he used to have a show on social media, YouTube, whatever, Block Talk. I don't know whether he still does that show, but anyway, this was from an interview that he did. This guy was one of the clowns behind Cabbage Coin. And ironically enough, eventually he actually did have his day in court, and I think he even went to prison. So go figure. Anyway, so if you're playing in crypto, you're playing in venture cap, you know where you are. You want to, here's the most important thing about this whole damn investment crap, right? You have to understand that every single player in the whole damn market falls somewhere on this curve. Right, there it is. Of course, definitely a part of our education program. In fact, actually, there was some clown last cycle who he literally wanted to sue us, and he's like, "You never told us about diversification." And all the other students in the video are like, "Yeah, he did." But everybody has to learn. Actually, I'm not quite sure what this Markowitz frontier is. But everybody has to learn this. This efficient frontier was a sort of a cornerstone of two gentlemen. And I remember when they won the prize. Basically, they won $1 million prize in economics, just basically mathematically proving that don't hold all your eggs in one basket. Wow, there's a shocking conclusion. So anyway, the point here is to actually outperform, you actually have to have some of this crazy ass venture capital stuff in your portfolio. You have to. And you've all, and probably a lot of you have been now through a couple of these crazy ass crypto cycles where you can, I mean, hell, all of you watched a beautiful analogy of crypto. That silly Luna went from basically nothing to, hey, I'm a $1 billion player, right back to nothing. But you got to have a little bit of that in there so that it balances out. Because the hell, fuck, if you're in Europe and you own a government bond, you actually have to pay the government. They got negative yielding interest rates. Well, how are you supposed to balance things off in that kind of world? That's why venture cap has its role. But conversely, if you think about it in simplest terms, if you have part of the curve that previously was charging you money to own it, a negative rate, well, then that means that things that are zero rate assets like a Bitcoin or cryptocurrencies, right, that basically, I mean, to all intents and purposes, they don't really have any intrinsic value, and they certainly don't have a dividend yield or a coupon. And there's no guarantee associated with them. What's their role in this, well, government guaranteed paper, which you really should have at least a bit? Well, it's yielding negative yield. Well, how are we supposed to make a positive yield for our portfolios? Well, probably the venture capital market in those kind of scenarios does really, really well. Then we get into this current market state. Now short-term interest rates are cranking higher, bond yields are rising. And I heard another guy the other day, he was actually laughing, going, there's a whole generation of investors that actually have to come to learn that government bonds actually can pay you a positive yield. And it's like, wow, really? I didn't know that was possible. So if those bonds now are going to go to positive yielding assets, does it not make sense that maybe the insane nutso venture cap movement, maybe that's going to be tempered down a bit just to balance everything out? But the point here is that your job as an investor is you have to have a mix of all this stuff. Got to have a little bit of the small stuff, a little bit of the big stuff, a little bit of stuff that has no earnings, a little bit of stuff that just sits there and says, I'm a lump of gold. Here I am sitting on the floor. Don't I look beautiful? I'm not going to lose much of my value if people start freaking out. But at the same time, too, if the economy gets going and earnings companies start to ramp up, well, gold's probably not going to do a hell of a lot in that kind of environment. The point is, it goes back and forth, back and forth, back and forth. You want to know what capitalism is in a nutshell? Capitalism is this image. And the problem is that I show you this, but nobody respects it. Wait for it. Wait for it. It's around here somewhere. Darn. I thought I had it in here. Fudge. I know I had it in here because I showed it to somebody the other day. Terrible, though. Oh, here we go. This is capitalism. It's just as simple as this image. The herd, the model, think of this is like a lava lamp. And the capital of our society is the blue stuff, is the lava. And almost think of this as like demographics. The population tilts from like they're really old to really young. It's it from like, earning lots of money. And of course, economy's hot. So, dot-com boom, right? One end of the movement, right? You can think of all the generation, all the baby boomers, putting their money into the market. Then it shifts back the other way, and then they all want to take their money out of the market and put it into safe, secure assets. Then it shifts back the other way. But this is basically capitalism 101. And the problem here is you don't want to get caught investing at one of these apexes, right? This is like just recently Bitcoin at like $65,000. Right? Your job as an investor is to understand which way the lava lamp is tilting, and you want to try and get in on these moves as they're doing this. And then when they pop, kind of like that UBIC chart I showed you a second ago, you want to be selling into that move. You don't want to be buying into that move. Does that make sense? I mean, that's capitalism in a nutshell. I mean, I don't know how much we charge you for the courses, but if you paid the fee for the courses and all it is you learn from this entire damn education program is this is capitalism 101, then you've gotten your value out of it. I'm telling you, it's just that simple. So hopefully you can see it. And, unfortunately, I mean, sure there's probably a lot of people watching this video going, yeah, but Brian, I bought Bitcoin at 50 grand. And unfortunately I sit there and go, well, not really much I can do to help you right now. Hopefully you learn, right? Hopefully you learn not to make that same mistake in the future. There's one expression, one simple expression that when you hear this, you know that we're at one of the ends of the lava lamp. Who can tell me what that one expression is? It's really, really sad. There you go. Nailed it, Eddie. Eddie, you're gonna do well in this world. You're made in the shade, dude. Sure hope I can have you participate in the Portugal dream. I swear, between me, you, and Andre and TRI, I think we could almost just buy this place ourselves. But anyway. What do you say here? Yes, I am. All right. Okay, so kind of went off on a tangent. Somebody asked me about UBIC, and of course that brought me back to crypto and Bitcoin and all that fun stuff. One thing I did want to do before I run out of time here was, I guess a couple things we should probably cover. First and foremost, if you are interested, school program, we only have this open 3 windows a year. So you can see the window is closing. So by all means, if you've taken the course and stuff and you're like watching this and you're like, I'm a fan, Brian, but I've already taken the course. Keep in mind, you actually get like a 10% referral fee or something like that if you actually refer somebody to the program. We actually pay, there's one guy, and God, I can't, this guy, he's such an enigma. But we even named his setup after him. And for a long while, he was referring a lot of people to TRI because he has a really, really big following. And he made a pretty darn good income just off of the people that he referred to TRI. So just be aware, by all means. I'm not trying to grind you or shill you, person either takes program or they don't. It's not no skin off my back either way. I would love for this site to continue. From what I understand, I think the numbers are relatively respectable, so we don't have to worry about keeping the lights on. But at the same time, too, this window's only open 3 times a year. So if you can take advantage of it, it's there, and the window is closing very shortly. So just be aware, okay? Also, too, this is a great page just to come down and just, see what people who have taken the program, what they say about us. And I think on balance, we've done a pretty good job here. I'm not going to say 100% of the people are always satisfied. You're never going to be able to satisfy all the people all the time. I mean, that's just the laws of physics. But I think on balance, when I get on the other side and I ask my maker, did I do what you guys asked? I think that I'm going to get a pretty good review. I think this is good value for your money spent, and I think we're honorable, and I think we base ourselves on the truth. So when you base yourself on the truth, obviously we're not going to sit here and go, buy our thing and you're going to make $1 million. I mean, it doesn't work that way. But what I will say and what I tell people is, buy our thing and at least you'll have an educated approach to running your small business of trading. And a good solid basis. Consider this a business. You're in business to make money. That's the way I like you to approach investing your hard-earned money in the market. Things like the efficient frontier. How many people in crypto talk to you guys about the efficient frontier? And what I find hilarious, I remember I was a stockbroker, so I heard every fucking line in the book. There's not a single line that you can pass by me that I haven't heard before. I mean, I've heard everything. But I used to have clients of mine, and crypto is exactly the same way, where I would say, I would do like portfolio reviews, right? And I would say to somebody, do you fancy yourself diversified? And they would say, oh, yes, I'm very diversified. I own gold and silver. I got the whole market covered. Okay. Well, same sort of thing. If you got all your money in crypto and maybe you own some Bitcoin and some Ethereum and you're like, well, I'm diversified and I got a little bit of UBIC there because, hey, now efficient frontier, I want some of the shit in there too. Okay, but don't kid yourself. It's all one asset class and it is all venture cap, no doubt about it. And also too, what scares me, I don't think people have really bought the idea that crypto is a commodity. So there is this big debate, can crypto morph into a growth asset? I think the jury's still out there to a certain degree. That doesn't mean this isn't our future, because frankly speaking, I think blockchain technology, if you could really call it technology. I don't even really like the way that they use that word technology, because frankly speaking, this is exactly the same as if we were living 100 or 200 years ago, and there was the general store in your village, and every single farmer in the local area would have a quote unquote ledger with the general store. And maybe they have chickens on their farm, so they harvest eggs from the chickens and they bring them into the corner store and they would get credit at the corner store for their chickens. And, they need some sugar, they need some, flour or something. Well, they could, let's say they didn't have a credit, any money. They could actually run a debit on the ledger at the corner store. That's in essence exactly what this is, this whole Bitcoin thing. It's exactly the same. What it really is in my eyes is blockchain is the next evolutionary step in the evolution of our electrified society. That's really all blockchain is. It is a function of the electricity grid. That's kind of a weird way to think about it, eh? And if you think about technology, quote unquote, almost all of it in what I see has everything to do with just this is nothing more than that electricity concept that was sort of stumbled upon by guys like Ben Franklin, and then further, personified by guys like Tesla and, Edison and, Westinghouse and all those kind of things. This is just another form of electricity usage. So, growth never moves in a straight line. It's all, it's just like the lava lamp. It's all ebb and flow, ebb and flow, ebb and flow. And ironically enough, there really isn't a lot new here. It's just this is electricity's version of your, ledger at your country corner store or general store or whatever the hell you'd use it. Anyway, that's my perspective of crypto. But the irony of it all is that it's very unpopular. And I don't really I've told that analogy many times over the past 8 years, and none of you have even been the slightest bit interested in that analogy, which I do find kind of funny. Anyway. Okay, so I want to talk a little bit about the school. So we got that up and running, and long and short of it here is this is to help you run your small business of trading. That's really what this is all about. We do a lot of fun with squiggly lines, but actually, even Josh, which I thought was super cool, did a long rant the other day on I don't know if this is it or not. Cool music. On this is actually what you come to TRI to really learn is what are the little sort of helpful tools that this clown has been at this for 30 bloody years, and sort of we've kind of tried to distill 30 years of my life in the market down for you guys, to help you sort of speed up the process of you being able to really functionally operate in the marketplace. Keep in mind, most people that come to the market, they'll just buy whatever the tout is, and if it goes up, great, they're so smart. If it goes down, well, I guess that's the end of that. Back to McDonald's flipping burgers. They don't really come at this as from like a business. I'm running a small business of investing approach. So I actually think that the real value in what TRI does is this kind of stuff. And then, of course, our community, everybody's educated. So somebody comes in and goes, hey, should I bet all of my money on this coin because I heard this guy on social media? And the whole community is going to be like, what? Get your ass into school and get educated, which is perfect. So squiggly lines are fun, but I actually find that most people in this sort of trading world, they concentrate on the squiggly lines. This indicator, that indicator. Oh, look how awesome I am. Look at this awesome script that I've developed. And they don't understand that actually most of this is actually to do with you and managing yourself, knowing what the rules are and then following the goddamn rules. And the people that can't follow the rules, they don't last very long. Simple as that. Anyway, so another plug for the school, but that's basically what we do here. Have some fuck. Oh, excuse my French. Whenever I think about the job that we pulled off here in this dev cycle here, bringing this this concept, this is like my 1980s website, into the 21st century, I'm just over the top excited. So I end up start swearing, and Brian's voice goes a couple octaves higher. I'm so proud of the boys, the way they've pulled this off. And I have to say, I mean, the interesting thing is what's sort of the sentiment out there right now. I'd say it's pretty darn bearish, eh? It's interesting how we were looking at that NASDAQ and we noticed that it's right at a Foggenbaum level there. And what's kind of funny was I was just scrolling through this. Do these indicators look like they're emming out and they're going down, or do these things kind of look like they're Wing and they're going up? Look at this one. And that damn thing looks like it's going up. And it is the Dow Industrial. That thing's going up. What the hell's going on here? The big sort of indexes that cover the whole country. So look at the S&Ps. I mean, that darn thing's going up here. There's Europe, not really structurally the best looking move, but it is heading higher. There's Canada and Australia. Interesting. Australia has officially gone socialist now. Eh? Did you guys see that? Very rarely do the Australians ever elect a socialist government. I think it's only happened like 4 times in their past like 500 years or something. Anyway, And now, of course, oh God, the rhetoric, like the guy who the socialists elected, he's just all about climate change, eh? So it's just like, wow, here comes a big whack of Australian climate change in your face. So it'd be interesting to see. They're probably going to completely derail the Australian economy. And I've told you guys, the two, let's do a poll here. Let's see if you guys can read my mind. What are the two currencies in the world you should probably try and stay the hell away from? And of course, there's this other currency that I wouldn't touch with a 10-foot pole, regardless. But the two currencies, and by the way, I just mentioned one of them that you probably ought to stay the hell away from for like literally the next 20 years. I mean, it's that bad, folks. Right. Canadian dollars and Australian dollars, the commodity proxies. They're toast. They are absolutely freaking toast because these stupid countries, we just went through a commodity cycle. They should have been running surpluses. But even when they were supposed to be running surpluses, these stupid countries, democratically elected politicians, puppets of the goddamn banking system, and of course, the banking system can't make any money if the government is paying down the debt. The only way that the banks make money is you got to go out and borrow more money. So the banksters love this shit. Completely selling the citizens of these countries down the road, down the river. I heard a guy the other day tell me in Australia to have a pack of smokes, it's $50 now. $50 fucking dollars. What are we, in prison? Or maybe the currencies are absolutely worthless. And the sad part about it is it's the latter, it's not the former. So I would strongly advise you to avoid investing in the Canadian or Australian markets. And of course, Russia is also another commodity producer, supplier. I would stay the hell away from Russia. And of course, ironically enough, the bozo there running that place is trying really hard to blow things up here in the short term. It's almost like he wants some sort of cataclysmic war so he doesn't have to face the music that technically his society is bankrupt. Oops, shouldn't have said that. See, the irony of it all, and this is like the Americans in 2000, right? Americans in 2000, they had a major structural problem. Baby boomers were leaving the workforce. The economy had to shrink. So how the hell do you stop the economy from shrinking? Remember, all these people, all they want are higher prices, higher prices, higher prices. I know. Let's go and start a war somewhere. And sure enough, George Bush Jr. did exactly that. And it's so funny. The other day, the cocksucking son of a bitch, he can't even morally speak about this now without his subconscious coming out and derailing him. This is perfect. This is, in essence, what happened here is his subconscious can't live with the fact that he literally went in and invaded another country pretty much illegally. And, you know, there's our buddy over there on Andre. He loves to shit on the Americans just as much as I shit on Vladdy. But I'll agree with him. I mean, there were no weapons of mass destruction. There was no justification. He went in there because he was just basically lining his pockets and all his cronies' pockets that are heavily into the military and defense complex in the United States and the oil industry, blah, 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 blah. I mean, it's so cliche, it's ridiculous. But it was really cool to see the other day. Can you just imagine if he said that in some sort of big public forum? This must just be eating away at his soul. Right. I mean, literally, he was caught. So these superpowers, they do this at the end of their cycles. I mean, it's fascinating to see that. But basically, what Russia is doing right now is they're trying desperately to offset the fact that their cycle's over. Really, it's nowhere but down for the next 15, 20 years for Canada, for Australia, for Russia, for South Africa to a certain degree, and any other sort of major global commodity provider. Wonderful. And it's fascinating because remember, I've been talking to you guys a long time about the Vancouver real estate market and how it just got to the point of absurdity. And now actually I'm starting to see anecdotal evidence that the bubble is starting to pop here. Of course, we already know the Chinese bubble that's popped a while ago. And I think it's a direct sort of spin-off, if you will. Okay, so what I really wanted to do, and actually this is a good dovetail, was I just wanted to circle back and answer any sort of follow-up questions. We did last week talk a little bit about the US dollar, and I tried to explain that we're now in a US growth cycle. And actually, it's interesting. I've even heard now. I heard somebody the other day, all the guys in the day trading room, they all chastised me for I like to call the millennial generation the kids that were born around the millennium. That seemed logical to me, and they're all like, no, actually it's the generation before that. So I heard somebody the other day call the Gen X kids, which is what Liam would be for me. I'm a Gen Xers. I think he called them like the Zoomer generation. It's kind of an interesting name. So maybe I'm staying corrected, but I always thought Liam was part of the millennial generation. But anyway, not quite sure where I was going with all that. But anyway, the point of the matter here is we're now transitioning into the millennial generation's earnings years. The baby boomers have been removed from the economy. They're all sitting in retirement, of course, on the golf course, all Berkshire Hathaway kind of people, and surprisingly, the Berkshire Hathaway guys, I mean, I can't believe they're still alive. They should all be dead by now, but they're still hanging in there. So there's a lot of overhanging weight on this economy. But nonetheless, I think, the issuance of the currency, the way they've diluted the currency, and basically sort of bought their way out of this fear cycle has ensured that the US dollar hegemony system, and I even heard it from another guy the other day say, it's not really like the US is so great. It's just, you got a better alternative? You're going to go give Winnie the Pooh your money? I would never fucking give Winnie the Pooh my money. I wouldn't give him a goddamn cent. Are you going to go give Vladdy your money? Ooh, God, that's even worse. Am I going to give Christine Lagarde my money? I don't think so. I mean, hell, they're negative interest rates. It'd be interesting to see if they even actually start paying people. Or are they still charging people to keep your money there? I mean, what choice do you have? You're going to give it to fucking Pierre Elliott Castro here in Canada? Fuck, I wouldn't give that guy my money. There's a really funny video that I put out like a week or two ago. And I've done lots of videos recently about the Canadian bond markets basically collapsing. Why? Because the Canadian government, they don't give a fuck about how many bonds they issue right now. Like the guy in the opposition's like, how are we going to pay for this? And the guy who's representing the government stands up and doesn't answer the question, even though, like, really it should be, well, we've budgeted this money coming from this revenue source, or we're going to issue these bonds, or we're going to issue these T-bills, or we're going to, put a new tax in place or a new tariff, something, right? Some sort of economics, something. Government here, these sons of bitches. I mean, totally Klaus puppets. They're even told, don't think. Just what's the emotional response? So the guy in opposition goes, well, how are we going to pay for this? Where are we getting this money from? And the guy representing the government, his answer is, well, we have more jobs now than we had previous to the COVID crisis. Like, I'm not asking you about the country's employment situation. It sounds like it's pretty good, but how are we going to pay for this program? Well, more jobs. Well, that's nice, but I'm sorry. How are we paying for this? More jobs, more jobs, more jobs. I mean, I even put the tweet out. I couldn't believe it. So, in the face of that, just think of this realistically, folks. If you had a whole bunch of debt and um and keep in mind you already have that debt, and the long and short of it here, a country like Canada is already bankrupt. Already bankrupt. It's not a question of do we balance our books. We haven't balanced our books in probably 30, 40 years. So now they live in deficits. This is just like you going out and, okay, I've run up this credit card. I've maxed it out. Now what do I do? Well, you could go get a job. You could stop spending so much. No. Let's go get another credit card. And so they go get another credit card. So this is the COVID crisis. And of course, the irony of all this is that this market was supposed to pivot exactly here. Remember my comment from earlier, JP Morgan, billionaires and millionaires. So if anybody who actually knew what they were doing in the market, they knew that this was coming. All these stupid idiots that are running our government right now have no clue about any of this stuff. They're dumb as fuck. They don't even have an education in commerce, which kills me. How on earth does this girl justify being the finance minister of my country with no education in this field? It's terrible. It's absolutely terrible. So what does the Canadian bond market do in the face of this? We're going to spend all the money we want and we don't give a crap. Well, the market's going to go, I don't think so. You're going to want to keep spending that kind of money. We're going to charge you. Keep in mind, these are bond prices. When bond prices go down, which direction do interest rates go up? Interest rates are the amount of money it's going to cost you to borrow that money. Interest rate, if prices go down, interest rates go up. Quit, focus here, Andre. You're not focusing. And if you're not focusing on this, you're missing the most important message of all of this. You can't keep doing what these socialists are doing. And I might argue, I had sort of made reference to this earlier, the Americans did this, Biden and all the, MMT money. People passed through a massive, CARES Act and all that stuff. The market didn't need it. And in fact, that instantly was translated and interest rates went through the roof, right? So that is the bond prices. Here are the bond yields. Boom. So can the socialists go out now and just spend money frivolously? The bond market is basically going to punish them. And the thing is that we've now made the transition. This should now trend higher for like the next 40 years. I mean, I'm just hoping that maybe we've hit a bit of an extreme. Technicians would probably look at this and say, well, this kind of looks like maybe a big shoulder neckline. So maybe we just hit the neckline. Maybe we got to come down to a shoulder, and this is the head down here, and it's a massive head and shoulders pattern. So maybe if we're really lucky, and look how far interest rates have got to go to come back. I mean, there's lots and lots of room for interest rates to move up here. What I'm hoping for is, because all of this price increase recently has been directly passed right on to the consumer through higher prices and this quote unquote inflation. It's really nothing more than your banker's tax. Thank you very much, dickheads. I'm hearing a lot of people, the only thing on their mind right now, this horrible price inflation, oh my God, did you go to the grocery store? Did you go to the gas station? Oh my God, prices are $50 a pack of smokes. So I get the impression that the socialists are going to be a bit bitch slapped here. Now, I do find it interesting what's happening in Australia, because that's actually going the exact opposite direction. And I wouldn't be surprised if you actually see that in a place like Canada, this clown who's in power right now, he actually gets reelected because the opposition, they don't have anything to stand on right now. There isn't anybody. That's why I think these countries are shorts. And my hunch is, I could be wrong, but my hunch is that the Republicans are going to take over the Congress this fall, and it's going to make the socialist movement in the States do a big back check. Actually, it's also interesting too, right? With what Mr. Trump did with the U.S. Supreme Court, you can already start to see that the U.S. Supreme Court is already starting to move more conservative. So in a weird sort of way, you're going to have the whole world moving one direction and the United States of America actually moving the exact opposite direction. And the poor old guy who's in charge of the U.S., Mr. Biden, my hunch is the last 2 years of his presidency are not going to be much fun. They are going to be a really, really tough slog for him. But anyway, we'll see what happens. Only time will tell. Okay, so I believe that the banksters are fully in the process of quote unquote normalizing interest rates. This should absolutely destroy MMT. It should destroy economies that are built on borrowing. It, ironically enough, is going to just rip the hearts out of sort of the cryptocurrency folks that really don't have a business model. I would say something like a Bitcoin, as long as we don't start hearing talk about 51% attacks, then I think, price can just slowly work its way lower as we go through this correction process. We'll probably start hearing more and more 51% attack kind of conversation when we start getting down into sort of cost of production windows. We're still relatively high here. But if anything, the good part about it is if you're like a little old lady and you're like, well, that Beamish guy says I'm not allowed to chase, I'm not allowed to buy up markets, I have to wait for reload zones. Well, actually, you got your first indication that, hey, we're not so fluffy anymore. Usually Mountain Man is like, he gets a little bit of play for the traders. Keep in mind, Mountain Man's trader guy. And usually I've noticed in Bitcoin, it really loves to bottom off of 78.6. So my hunch is it's somewhere down in this area. I don't know whether I mentioned it while we were recording, but one thing that I find hilarious is when I used to mention, well, I think price needs to come back. Oh my God. People would literally send me death threats with that kind of talk, but you can see it happening. And we also have like now harmonic patterns that will also take us down into this area. Also, too, I think to a certain degree, there's a psychology involved here. It's fascinating how Mr. Novogratz, of all people, was sort of our guy to sort of hold the floor in, that if this is still just a correction, good old Colin pump chaser zone. Novogratz himself even kind of thought that, hey, we should see some sort of floor in here around 30s. And of course, Novogratz now dying 1,000 deaths with that Luna nightmare, right? So fascinating. We've puked out through those. So, now we're in the psychology, right? What's the psychology of the market right now? Just so we can all read this. First, buy the fucking dip failed. So buy the fucking dip right in there. See ya. Bulls are dangerously exhausted. And actually, I see that a lot right now, guys. I don't see the, where's the Dannies of the world? Where did they go? They've all sort of disappeared. Snipers will play key fibs like 61.8. I think that's exactly what that dip was a week or two ago. So snipers will play key fib swings. Rarely do bottoms form here. And especially with the fact that we went through these lows and these lows, they kind of cleaned out all of the demand that would have been down here with that tail. That tail right there is market slammed into a whole bunch of buy orders. Mountain Man, he gets filled, right? And then the market ratcheted back up. And now we have to ask ourselves, okay, was this bottom for real? or was this just a whole bunch of open orders just got filled? And I think it's the latter. But we'll know that this is for real if we can actually start Wing out here and working our way back up. No doubt about it here, folks. We've done a lot of technical damage on this chart with this move through here. Major technical damage. I would even say, I'd even go so far as to say that if this is for real, then what we're going to need is a rally all the way right back up into that level and take that high out. Then maybe if we can do that, we're going to get a reload zone of this range. Maybe we start Wing and away we go. And hopefully you can see, oh, well, the whole damn thing was just a big honking inverted head and shoulders, and away we go. But that's going to take a lot of work. A lot of work, no doubt about it. And considering that we just broke and the inertia is to the downside, is that even a realistic thought right now? I wouldn't expect this. If I was going to expect something, I would expect the bear ABC to play itself out. Now, as we said earlier, I mean, markets never move in a straight line. I think there's definitely trader levels here, right? As we sort of pointed out. Traders are going to come in and nibble, and I think that's exactly what happened here. So I thought the best way to sort of finish this was to I drilled down to like lower time frame charts here today as we started talking away on this site. Kind of like, and actually I didn't even, oh yeah, we did talk a little bit about this, Could we be in here and a little bit of back and forth? Maybe. I think Mr. Saylor, he's got it. We got to fill this gap in. I don't see how that gap could not be filled in. But there might be a bit play back up top. Notice there's a bit of a gap there. So maybe we're at a bit of an inflection point here in the short term. But if we're looking at good old corn, and also too, we look at sort of risk assets. Remember that sort of decennial report. Should see some sort of bottom here, May, June. And, everybody in the public now is just uber insanely bearish. So if anything, it makes perfect sense that they're going to try and form some sort of bottom down here. But it's interesting. There's Bitcoin, stocks, even gold for that matter, which is kind of interesting. There's the US dollar. Yeah, looking a little overbought if you ask me. Interesting sort of side. There's crude oil, not really overbought or oversold. And there's the bond market. And the bond market was egregiously oversold. And that was half the reason why the stock market broke to begin with. Was people looked over at the bond market 3 or 4 months ago, right? Way over here, and went, oh my God, what the hell's going on over there, right? It was ridiculously oversold. So what ends up happening? The stocks break, and now they're oversold. And there goes the bond market revaluing higher. But if the whole reason why the stock market broke was because interest rates were rising and interest rates are falling now, does it make sense to be bearish of stocks? Which is kind of ironic, right? Because what's the public thinking? And is the public being spoon-fed some sort of message here? And really the best way to see this, I think, is with the spiders. Because notice 2 things. Number one, if I do just a simple fib off of the bottom, that's the crisis low, back up to the top, what did we say is the natural sort of level market should come back to? But we might still easily be in a bull market. Anyone? Yeah, I stopped talking there for a second. Sorry. All right, 38.2s. Thank you. So where's the 38.2? Boom. Oh, hello. So really, actually, we could still be in a bull market here. Nothing's really changed. It's just the market just got stupidly overbought there. What is the trigger that gets the media? It's almost like this is scripted. As soon as this happens, then the media instantly gets told to say this. All right, as soon as the market corrects 20%, and really the way you got to do this, and actually I can just do a simple price study. right? What's 20% off of the high? Oh, hello. And I even saw this the other day. I literally saw people say, as soon as the market got into correction zone, everybody started freaking out. This is also the top of value. What should happen at the top of value? We should actually ask, do I want to accept back into value? And if I do accept back into value, where am I going? What's this setup called? I'll give you a hint. And actually, I got to wind this up. I got to head off to Liam now. I do that. And I do, oh boy, that. Now, do you know what I'm thinking? Yeah, well, and it's just not, it's, I think that 20% rule is exactly the same as the word inflation. Where does the word inflation come from? Who came up with that word? What the hell is inflation? It's not actually a naturally occurring phenomenon. Inflation only works in that world. So you could argue that when Herbert Hoover said to the banksters, you're going to go and lend out a bunch of money to the public and the public can't pay you back, well, it's your own fucking fault. You go out of business, you stupid banksters. You're idiots. And what did the banksters do in response? All right, Mr. Hoover, we're going to show you who's really controlling this economy. This is inflation doesn't exist. The most important thing is the strong purchasing power of the US dollar. And if you go and lend out a bunch of money to consumers, they got no business borrowing the money. You got no business lending the money. There are no bailouts for you. Go fuck yourself, you stupid fucking Joey Diamonds. Fucking leeches. That's what this world is. Inflation doesn't exist. But you can clearly see, following that event, what did every democratically elected politician learn? Who's driving this bus? And of course, the tragedy of it all is we all know that the banksters officially took over the US economy right here. I mean, I hate to say it, when you look back at an image like that and you see what they did to actually punish anybody who was like, fuck you to your stupid inflation nonsense. And then, of course, the guy who was in power here, he tried to do the same. And he ended up with what? His brain splattered all over the back of his car and all over his wife. Hey, thanks a lot. The guy here came to Washington and they basically hired a guy to try and take him out. But I don't actually think that the guy was even given the instructions to kill Reagan. I think the guy was given instructions just to scare him. And indeed, they did. Because literally from this point forward, Mr. Reagan said, we love voodoo economics. Even though his vice president, George Bush Sr., said, this is ridiculous. What are you people doing? You're destroying my country. Who's driving the bus? So anyway, there you go. Ah, there you go. Hinckley was a Bush family friend. All right. So the point of the matter here is we all know who's driving the bus. So we all know that, actually, it turns out inflation is a very respected term in financial management circles. Yeah, fuck you. I mean, it's criminal how bad this story really is, but oh well. There's not really much us little people can do about it, which is really a shame. But I tell you, JoJo, she asked me specifically, Brian. Nah, you know what? She didn't even ask me. What she said was, Brian, You have the opportunity to make a positive difference in this world, to make a real change in this world. She said that to me. I swear to God. She came to me. I actually was visited by my wife after she passed. I was extremely lucky. But I think they were like, man, this guy's right on the edge and he's just about to go and join JoJo. We got to do something. And I have literally spent my entire life since that event um, on this mission. What are we? 2 hours and 15 minutes into mindlessly ranting at you guys. Maybe I can somehow get through to one of you that this dream of just educating people, just so that they know what the truth is. And the great part about it is sites like TradingView here, it's very, you notice like the Fed, they tried to get rid of M2 money supply reporting. And man, the backlash by the public was like, oh, no, you don't. No, you don't. I mean, you heard Jerry Powell even go, well, M2 money supply data is not relevant anymore, right? You all heard him say that. Fuck you. You all now see the fucking insane price inflation that we're living in right now. Brian's tuna fish sandwich story, right? And everybody should know that just remember after I'm long gone, because these sons, Joey Diamond's got a fucking bullet with my name on it already. And I'm going to make some public appearance or public statement and boom, 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 Brian's gone. But that's cool because then I get to go be with JoJo. So I'm fine with that. I served my purpose. The rest of my life was spent trying to make a positive difference in this world. Simple as that. And I sure hope to God I've gotten through to at least one of you. I think I have. I don't think his name is Davo, though. Sucks horse cocks. Now the guy's actually going to go and say, if you guys like me, I think you should go and ask him politely not to NFT a little old lady. It's so tacky what he's doing. Very, very tacky. Oh, well. So you got to leave the little old ladies alone in this world. Anyway. Okay. It's getting on 1:00 and I still have to go get pretty for the boy. See if I can quickly just answer. So I talked lots about the US dollar. I think we've talked lots about the way that the US dollar works. In essence, a rising US dollar index means a falling currency for the other nations. And maybe what you need to do, whoever asked this question, is go to look at my rants about the way I played the Australian dollar long after the 2008 financial crisis, and why did the Australian dollar go up relative to the US dollar and the carry trade. So that explains why you would rather, if you want to see global growth, you'd rather see a stronger international currency system versus the US dollar index, not a weaker one. Also, too, I suppose if you're a commodity bull, you would prefer to see a weaker US dollar index because commodities, of course, are priced in US dollars. So that would, if we have a weaker US dollar index, then that means that commodity prices can stay firmer. So if you have a strong US dollar index and it's rising and it's trending hard, that doesn't bode well for things like gold. And I would also argue, to a certain degree, it probably doesn't bode well for things like Bitcoin. But understand, and this is the thing that I don't get, that people don't understand about Bitcoin. Bitcoin, even at the current price, Bitcoin does not give a rat's ass. It just doesn't care. The only thing that Bitcoin cares about is it has to stay above these lines way down here. And we had a site member who told us he has his cost for himself around 20 G's. I think that the people that are cost 20 G's, they're going to get run out of the business, and they're just going to have to turn their mining rigs off. The question is, how deep do they take the price? And then once we're down in this area where it is basically a cost of production or thereabouts, do we start hearing talks about 51% attack, which is the way that you destroy Bitcoin? If we do get that, or we get some sort of shock or something, oh my God, these people are trying to do a 51, then you're going to see a wicked spike. And my hunch is it's at that point, all the Bitcoin sort of rah, gung-ho people that did buy here and maybe sold some up here and are sitting on all that fuck you money and all that stuff, right? Hey, look at that. Hey, we should all go, thank you, Tinder. We should all go watch, what is that? XYZ Enough Watch stream. Girls here. Woo-hoo. I guess that's my cue that I'm done, eh? So thank you so much, Tinder, you stupid asshole. Look at this guy spamming us over here on YouTube. What a doofus. Just do yourself a favor, and everyone do not follow that doofus's lead. All right, so the point of the matter here is coming into areas down in this area. Do we get the 51% attack talk? If we do, then my hunch is we're very, very close to some sort of bottom, because the people that actually want Bitcoin to work, they will come in and defend it. I've seen it happen twice now. Right now, let the US dollar go up. Let this thing come down a bit more. There's no hurry. We all know about the Benner cycle. We all know about the decennial report. We all know about, congressional midterm election years. So there's no reason to be expecting a huge monster rally in these risk assets. Now, we all know about the interest rate cycle and what the Fed's normalizing rates, et cetera, et cetera. We all know, of course, global instability when it comes to trade doesn't help things like globalization. This is going to create more fractured world. We all saw what fucking Justin Castro did there with the truckers and basically just stealing their money and what I would just basically consider theft. And interesting to see the world's reaction to that. So this isn't the kind of environment where we're going to get these massive face rip rallies and risk assets. So anyway, oh God, there's so much more I want to talk about, but I do have to get off to Liam now. So I'm sorry, guys. There is I actually wanted to talk to you guys today about the setups that I actually tweeted out. Because I think to a certain degree, Bitcoin is basically sitting at an inflection point. And whether you're a bull or a bear, if you're a trader, ironically enough, you're not even supposed to have an opinion. You just trade your setup. So I thought this is interesting. This is a 4-hour bearish setup. You can see we have 3 lower highs to work with. We have pretty good structure. There's the bot entry. So if we dump through 27.8, 27.7, that's a big sell signal. So I could understand the bears seeing setups form here. And keep in mind, what's worse about this is contained within the context of a big daily bearish bot. And fascinating how those bearish levels, the ABCDs, would do nothing more than just take us right into Wyckoff check levels, or our Benkoff check. Anybody who watches our Wednesday crypto show, which is supposed to happen. This is what normally happens. So, what a big surprise. So if you're a bear, the setups are sitting there. And I even put out a note. I said, the setups are setting up. So there's that angle. It hasn't fired yet. And I've even conjectured. Do we front run the bot on this triple top failure and see if we can sneak in a little bit ahead of that level? to try and front run the bot a little bit. It's up to you as a trader. I mean, it all depends on how comfortable you are. Thought it was interesting off of this bigger bot. Notice there is the short entry. It was a difficult top to get into, but it's actually had its move stop to scratch level hit. So off of this really big bot, if it does ratchet back up and tag this trend line from the other side, actually the bears would be politely told, you know what, maybe hop off. So what would that look like? And it turns out, traders got to trade. Well, you could trade that on the upside. And there's that chart. So you can make an argument that there are bullish and bearish setups all the time in the market. It's just really a question of what's your temperament. This is the whole point of you got to build a plan. You have to identify ahead of time, well, what's going to get you to act? And then when the damn setups come in, you got to act. So we could make an argument that if this thing M's out in, triple top, whatever, well, that's more bearish continuation. If, however, this goes and W's out, there's the bot entry. Well, it sets up a cute little one. It's about 10, 15% rally right up into one of my favorite alumni on the site, a gentleman by the name of Colin. And if you're watching this, congratulations, Dad. I hope things are going well on the home front. He actually likes to call this sort of 38.2 to 50% retracement. His community, I suggest to students 38.2 first stop target. Remember I talked to you about the S&Ps. Well, you can use it on the other direction. This is a down market. We don't even really know whether this has stopped being a down until we actually test this 38.2 and notice, well, bull A, B, C, D. That would take us up and do that test, what we like to affectionately call Collins dump chaser zone. So I thought it was interesting that, also too, this off of this W, if it does fire Foggenbaum levels, we talked earlier about the power of Foggenbaum. So I think you can actually make an argument going both ways here. The one sort of secret ingredient to all this that I guess I'll leave the video off today with this is we spent a lot of time building out this breadth indicator. Remember I mentioned this earlier. What's the general tone of risk right at the moment? Is it down or is it actually up? To me, it actually looks like it's up. Then what do you think crypto is going to look like? Well, hello. What letter of the alphabet do you see more of rather than the other? I don't know if that's a question that you can answer. This looks like a lot of W's, eh? I mean, down, up, down, breakout. Down, up, down, breakout. Look at this. Down, up, down, breakout. And then over here on the entire universe, down, up, down, breakout. Look, you can see it. They're trying to push this thing up through the top here. Moving averages are positioned bullishly. So ironically enough, as long as this continues and the broader market's relatively happy, I think I got to actually lean with the bulls here. I don't know what's going to happen. And frankly speaking, I don't think you should get into the business of predicting the future. It's not in your best interest. Most of the time when you say, I think this is going to happen or I think that's going to happen, you're wrong. So what you really want to do is you want to follow the chalk marks, right? What is your setup? I do find it interesting that we've got this insane back and forth battle going on here. Whoever wins this consolidation, they're going to carry the day. I do find it fascinating that the whole market is just coiling. And if you look at the internal momentum indicators of Bitcoin itself, you can see that they're all compressing. Something big is coming down the pike here. But like I said, I think I got to err on the side of the bulls. The one thing that I don't like about this, and somebody says, yeah, and then the weekend finishes and fucking Big Brother comes back and shits on us. The one thing I don't like about these moves that I've noticed recently over the weekends is that basically the volume just disappears. Ironically enough, you guys all asked, please, can Bitcoin be accepted by the broader market? Can it become institutional? Well, guess what? That's what's happened. It is now an institutional proxy, which means on the weekends, it basically does nothing. unless the 1% has some sort of sneaky plan. But it is interesting. You can see here's a tool that TRI CTO Sjord likes to use, the Bollinger Band on RSI. Notice the compression. So most of the time these things are expanding, and you don't really want to touch the market while they're expanding. But when they're compressing, whoa, also notice, look at the coil that's going on in MACD. If you guys have watched any of my videos from the past, you'll know what I think about MACD coils. Uh-oh, something big's coming. So there's something violent is going to happen here, no doubt about it. Step right up, place your bets. You can go long, put your stop below here. Or if you're a bear, go short on the M top, put your stop up here, live with the results. It's trader's life. All right, I'm going to leave it at that. Got to go get pretty for the boy. It'll be interesting to see how this plays out. Frankly speaking, honestly, I look at this, I go, this is a coin toss. I mean, it could go either way here. And the good part about trading these setups, right, is they're 3-to-1 risk reward. So if you're right, you should get paid $3. If you're wrong, you should lose $1. Keep doing that over and over and over. Ironically enough, you don't even have to be right 50% of the time to actually be a scratch trader. So. All right, and of course, if you do want to learn this and you want to be in a nice, safe environment that makes you feel good, and lots of PMA and community is there supportive, and we got killer instructors that know this stuff backwards and could teach it in their sleep, and we got just bazillions of hours of video for you to watch on these topics. Consider joining the site. Hopefully that's a nice friendly sales pitch. Maybe even consider joining the education program. And like I said, education program doesn't open that often. So we do it 3 times a year. The window is now open. You got 1 day and 9 hours left. And as soon as the window closes, you're screwed. So in a weird sort of way, if you're just watching this for the first time and you're kind of considering this, maybe that's serendipity. I don't know. Get in there. Love to see you in class. PMA for the win. Slow and steady wins the race. Wish me luck with Liam today. I love when you guys all wish me luck. Awesome. Yeah, great. Cool. Thank you, guys. Awesome. Love it. Thank you, Andre, over there. Really helps a lot. Thank you, Raphael. PMA for the win. Don't take no win nickels. Remember what your number one job is as a trader. All the best. And the only thing left for this camper to say at this point is a big bye for